The rising dominance of China's yuan over the US dollar in global trade and finance has become a hot topic, sparking significant concern in the US financial and political spheres. This shift reflects growing geopolitical tensions, shifts in international trade, and changes in monetary policies, particularly as countries look to diversify away from the US dollar. In recent years, China's yuan has gradually increased its share of global trade transactions, driven by China's status as the world's largest exporter and a growing push from Beijing to internationalize its currency. For instance, as of 2024, the yuan overtook the US dollar as the most traded currency in cross-border transactions between China and other countries. This shift is largely supported by major trading partners like Russia, Brazil, and countries involved in China's Belt and Road Initiative. China has been encouraging the use of the yuan for international trade, aiming to reduce dependency on the US dollar and mitigate the risks associated with sanctions or dollar volatility. One of the primary catalysts for this movement is the expanding use of bilateral currency swaps, which allow countries to bypass the US dollar entirely in trade deals. These agreements, struck between China and several nations, facilitate trade in their respective currencies. This trend has accelerated especially since the Ukraine crisis, which led many countries to distance themselves from the dollar amid fears of weaponized sanctions. This rising influence of the yuan presents a significant challenge to the US dollar's hegemony in the global financial system. Historically, the US dollar has been the world's dominant reserve currency and has provided the US with tremendous economic advantages, including lower borrowing costs and significant geopolitical influence. However, the US is increasingly concerned that as more countries pivot towards using the yuan, the dollar's dominance in global trade and finance could be eroded. This has led to heightened diplomatic and economic efforts by the US government to maintain the dollar's prominence. The US is working to strengthen alliances and trade agreements, particularly in regions where China's influence is growing. At the same time, policymakers are closely monitoring the impacts of this trend on the US economy, particularly in relation to inflation, interest rates, and the federal debt. The shift towards the yuan is also tied to growing concerns about US fiscal health, including the rapidly increasing national debt and political gridlock in Washington, which sometimes leads to government shutdowns or threats of debt defaults. These issues undermine global confidence in the dollar, prompting countries to diversify their reserves by purchasing gold and increasing their yuan holdings. Geopolitically, this move by China aligns with its broader strategy to assert greater influence on the world stage and challenge the US-led global order. China's growing financial and trade partnerships, especially with countries in the global south, signal that many nations are more willing to engage with alternative currencies to reduce reliance on the dollar. In conclusion, the rise of China's yuan is more than just a financial shift. It signifies a broader global transition toward a multipolar world where the US dollar is no longer as dominant as it once was. The US is scrambling to adapt to this new reality, where economic and geopolitical influence is more widely distributed across multiple major powers.